Good evening, Alicia. Welcome, and everybody else as well. If you guys have any questions, comments, names, tickers, anything you want to go over, drop them in a comment section below. If you're on the live stream, you can go ahead and drop it in the live chat as well. I'm about to comment here, and we're going to get going. Up per usual, we're going to start with like, where's the state of the market, right? So I have the S&P 500, the cash index here. It's holding up relatively well. If you guys are interested in technical analysis, patternings, blah, 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 whatever you choose to do and however you choose to trade, I have a little triangle / wedge pattern here. You can see that last week, probably on Monday, I would say, we got a little test out of it. We came back and retested and held on Tuesday and then Wednesday, and we pushed back out. So technical analysis wise, it's holding pretty good. We are coming up to a potential area of supply where we found on June 15th, around the 7,575 mark. So that's something to be looking forward to, but I mean, all-time highs is only 0.6% away. So it's not that far off. Looking at the equally weighted RSP S&P 500, so that is taking out the heavyweights such as the Mag 7, because those guys are really the ones that move the S&P 500 because of the high percentages. The RSP takes those weights out and equally distributes the motions and movements of all 500 companies. And that continues to respect the 21 EMA, continues to hold higher. We did get the gap fill on Friday, I believe, on that. If we didn't, it's pretty darn close. The NASDAQ 100, it's still really going nowhere. We talked about this last week. It continues to fill in this wedge pattern here. We had a little undercut of that, found support at the 50 EMA, also found support at the prior support area of, we can just call it 29,000, around that area. And we continue to fill in the wedge. I think this is it's a bullish pattern. It's just some consolidation in an uptrend. And time correcting. Otherwise, I know we got some Bitcoin fans in here. Just give me a second, Dan. Bitcoin bear market. I don't know what else there is to tell you. 200 is going down. The 50 is coming down. It's over the 21 and 8 EMA. You got that going for you. But overall, like, it might be trying to find a bid here. There might be buyers here, but don't be surprised if we go lower to 55 and heck, maybe even 50,000. So it still needs some time. What has been moving the markets over the past few weeks, again, is the semis. So SMH continues to have a wedge pattern here, or a descending triangle, if you want to call it that. Either way, the support is around $570, around the 50 EMA. It continues to fill this pattern out. Overall, the semis, they just look kind of sloppy. There are some names that look okay, like INT, I'm pretty sure it's AMD, that's near the all-time highs. That looks like they might break out, but like overall with the odds, I don't think are in favor of it breaking out strongly, continuing, as long as the entire sector just continues to chop around, because that's really the standalone. So I don't know. I'm not a super fan of the semis just yet. I think they need some time and some rest to go. Otherwise, that's all I have. State of the market, technical analysis, where it comes from, basically the sectors, right? Dan, do you have anything to add on top of that? Otherwise, we can move on to geopolitical, macro news, things like that.
I mean, S&P looks fine for now. A lot can change tomorrow.
Yeah.
A lot can change tomorrow. Tomorrow, the banks are going to be reporting, and that's going to be a big thing. I think the biggest issue facing the markets right now, which it's ignoring, but the biggest thing that the market has to deal with, is the yield. The yield is a real problem. A real problem. We'll get to it, but that's pretty much where potential problems may arise. It's earnings season, so a lot of stuff is going to be dependent on earnings now.
Right.
This is the time. A lot of what got us there is not going to be continuing to move us forward. So again, we'll get to that, but for now, we're to a large extent holding where we need to. Not really doing much else outside of that. It's a little bit more have and have nots. Again, we'll get to it when we get to indices and what have you. but it's really now a question of earnings. Earnings are really the driver. There's nothing else to say. That's really what's going to. It's not going to be war. It's not going to be any of that stuff. It's going to be plain and simple, just earnings. And this is the time. This is the time.
Yeah, I know you've always mentioned, like, as an equities trader, swing trader, and even day trader, really just equities in general, there are 4 important times of the year that someone can really make money, and that is now. That is earnings season as it comes up, right? So
Yeah.
this week, or actually today, and probably over the next few weeks, I think that would be good to kind of give everyone, our team, myself, everyone, a good reference to really focus on, because we need to learn how to take, if we haven't yet, to take advantage of earnings season, the most important time of each quarter, to make money, and prep for that. Good. All right. So geopolitics, macro news. I mean, I don't know if anyone is shocked that the ceasefire between the U.S. and Iran is basically over. There's been attacks. I just read a headline. There was, I think, 3 U.S. Troops that were killed, maybe this evening. And drone attacks. They're shooting. The Strait of Hormuz is now closed, and I'm pretty sure what was oil gapping up here?
It's like 73, 74. Nothing to write all around.
Yeah. So okay. So it's gapping up either way. So I don't think they're really, like, everyone on X is like, oh, the market doesn't care about the Iran war. It really seems like it this way now. It's like, I don't know. In my opinion, I feel like the market really hasn't cared about the war in a while, because it's been so wishy-washy on and off. And I don't know. I'm not in that camp. I think the market hasn't cared for a while, so I don't really think we need to spend much time on it. You agree? Unless you have anything important to say, like the war is the war at this point. That's how I think the market is taking it.
I don't think you need to really wait. The problem with oil is that everybody is bullish, yet it keeps going down.
Yeah.
Fundamental picture and the technical picture, they're not lining up with each other. According to what we do, it's actually bearish. I mean, that's the reality. It is bearish. However, the truth be told, I don't want to spend too much time on this, is that there's really nothing to do there. I mean, as stupid as this is going to sound, because as much as it's in the headlines, it's not really giving you anything. And if you're the type of trader that's sitting and trading all night long, knock yourself out. Do what you got to do. But I've always said it, and I'm a firm believer in this. The Asian session is basically, a waste of time. Everything doesn't happen until Europe opens, when Brent starts trading. So it's just, it's just not giving you anything. It's really not paying you. It's just not paying you. It really just isn't paying you. You would expect it to be a lot more volatile than it is, and it's just not. It's just not paying you. And this is coming from an oil trader. Oil and energy, my bread and butter, and I haven't been there in weeks. It's just not worth it. It's just not paying you. It's just not paying you. So I don't see a reason to continue, really. From a geopolitical standpoint, you could talk about all you want. From a trading perspective, from making money, at this point, it's basically mental masturbation.
I think that's a good way to put it. Yeah. You could always get caught up in the headlines, right? But the headlines and the news, the noise, it doesn't make you money. You still have to do your homework. You still have to be prepared.
Yeah. I mean, listen, Jeff Curry, who's, he's unbelievable. I mean, the guy there's no one better. There's just no one better. And he's been pounding the table about tank bottom. And everybody's listening to him. And he's not wrong, but price is proving him wrong. So, like, I don't want to sit here and say that he's wrong, because he's not wrong. He happens to be 100% right.
Right.
Just price is not reacting that way. So what are you going to do? You're just going to sit there and keep fighting it? At some point, oil is going to wake up, and oil is going to have a sick move where it's going to be up. I said it before, and I'll say it again. I think oil is going to have a massive move, like a 20, 30% move. even 25%, like a massive, massive, massive move.
Mm-hmm.
And it's going to catch everybody off sides, and that'll be it. That'll be the move. But until that happens, there's really no reason to finally got it. There's no reason to sit and just you're basically jerking off with it all day long. It just doesn't make sense. It's just not happening. And at the end of the day, I've said this 100 times, and I'm going to say it for the 101st time. At the end of the day, I am a firm believer. This is just me. I am a firm believer that in the futures market, Treasury is there shorting futures. I am a firm believer in that. I can't prove it. It's a conspiracy theory, so to speak, in my opinion, but I think that they're really doing it. I think Treasury is there shorting the market, and they are keeping a lid on prices. That's why oil is where it is, because Trump wants it down, it goes down. He says, you hear him talk about this. He says, oh, we're going to go into Iran. Okay, oil may be up a little bit. Then all of a sudden, the next thing you know, oil's going up. Why? I'm telling you, I believe that Treasury is in those markets, manipulating those markets. I'm convinced of it. Just my personal opinion.
Well, I mean, I don't know if there are many people that know it's deeply ingrained into the oil markets that you are, how long you've been doing this. I don't know many other people. They're probably few and far between that have the intuition and that kind of have the connection to the oil market. So whether you say, it's conspiracy theory or not, I think the fact that someone is in your caliber even has the thought or even has the feeling, the intuition of what could potentially be going on says something. So I'm not completely dismissive of it. All right, good. Let's move on. Let's move on to earnings season. Yeah.
Okay, so before we get to earnings season, let's go a different route. We talked about this in the group earlier this week. I think it's worth bringing up because I just think it's a worthwhile thing. Something to consider. We touched upon it last week a little bit, but I want to bring it up again because it's just such a crucial point. The biggest thing that we're seeing on a day-over-day basis is that you really have to pay attention to Dow, S&P, NASDAQ. You really have to pay attention to it. Now the Dow, to a large extent, no matter what anyone says, does not matter. It doesn't matter. It doesn't count. Nobody gives a shit about the Dow. I'm sorry. I know that the numbers are big and everybody wants to talk about it, 50,000. Nobody cares about the Dow. Nobody. There is not one person who's benchmarked to the Dow, not one fund. Nobody cares about the Dow. Plain and simple. And you can bang your head against the table and you can say all day long, oh, the Dow, the Dow, the Dow. Nobody cares about it. End of discussion. However, one thing that has been happening is that when you're dealing, which we talked about last week, when you're dealing with these quants who are just programming, you're seeing certain things happen and they're repeatable almost on a consistent day-over-day basis, where you're seeing tech lagging, S&P being bought, Dow being bought, tech lagging. Then you get a situation where you get tech strong, Dow weak, S&P kind of meandering. It's been a repeatable pattern almost on a consistent day-over-day basis the past month almost to a large extent. What that's telling you is that you used to have certain clues you could use. You could rely on the underlying stocks. You could rely on certain things, rates, the DAX, certain things you could trade against each other. Where's gold? Where's oil? To kind of get a clue as to which direction we're going to go. Because now we're more like a video game, the game has changed where you have to really pay attention to what are they buying if you want to be long. Like, what are they buying today? What are they going after? If you can piece that together, and you can't do it right off the bell because it doesn't happen that way. You have to kind of give the market a little bit of time to open up, wake up and see which direction it wants to go, and kind of start to piece together what are they buying today. That gives you a lot of clues as to how things are going. And with earnings coming, because this week has no high beta tech with the exception of Netflix, which we'll get to in a minute, it's really going to be a story of the S&P this week because it's all banks. Tomorrow is all banks. You never ever, I can't remember the last time that you had so many banks all reporting of importance on the same day. Usually the way it goes is you usually get Citi, Bank of America on one day, JP Morgan on another day, Goldman on another day, Morgan Stanley on another day, Wells Fargo on another day. You usually kind of get them spread out a little bit over a 2, 3, 4 day period. Here, this quarter, it's not happening that way. Tomorrow morning by 7:30, they're all by 8 o'clock. They've all reported. By tomorrow morning at 8 o'clock, you're going to have J.P. Morgan, Citi, Bank of America, Goldman, Wells Fargo. They will have all reported, all of them. The only ones that are left are Tuesday's Morgan Stanley and BlackRock. Now, BlackRock, nobody cares about. But whatever Goldman says, Morgan Stanley's pretty much going to say the same thing. The only difference between the two of them is that Morgan Stanley is more of on the asset management side and the wealth management side than Goldman is. Not that
Yeah.
Goldman's on that business; they're in that business. But really, Morgan Stanley is more on the wealth management side. That's just really what they do. Goldman is a little bit more on the investment banking and trading side. Different, same business overlapping, just a little bit different. Usually, what one says, you can basically get the same from the other. The problem you're going to have tomorrow is that because you have the big money centers all reporting one after another, it's going to be very confusing. And they're probably all going to do well. The thing you have to listen for is something called net interest margin. I talked about that on the video this week. That's how banks make money. So really, it's going to be where are they on the net interest margin side? Everybody's going to obviously be listening for what Jamie Dimon has to say. I think their call starts at 8:30. I think I'm pretty sure. I'm not sure. I don't remember exactly. So you're pretty much going to get an idea of what's going on. After Monday, leaving Netflix out because Netflix, really, it doesn't really matter that much. You're going to start getting healthcare reporting. J&J reports this week. I mean, I know you have the thing up there so everybody can see when they're reporting.
Yep.
But J&J reports this week. Like the bigger boys in healthcare start to report. One of the ones that I talked about today on the video, which I think is important, is JB Hunt. So JB Hunt is a NASDAQ listed stock. Wednesday night. You hear me?
Yes.
Okay.
You might have cut out a little bit there.
Yeah, I got a call. That's why. Sorry, I'm on a thing. So JB Hunt is important for one specific reason and one reason only. They are in trucking. That's what JB Hunt does. So JB Hunt is really going to give more than FedEx and more than UPS the state of the consumer, because they're not shipping like little packages. They're shipping truckloads. So you have to pay attention to what they say, what the rails say, like CSX, Union Pacific, because they start to give an inclination of what stuff is moving around the country. They're not going to tell you who's shipping what. That they're not going to do, but they're going to tell you how cargoes are doing. They're going to tell you what are the shipping rates based off of where diesel prices are. It gives an inkling onto the state of the economy from real world views. They're important. Everybody always wants to be high beta tech, but you want to know you're getting all this government data on a day-to-day basis. You want to know if that data is bullshit or not. You're going to find out if it's real or if it's crap based off of what the shippers tell you. And not necessarily FedEx, UPS, but the JB Hunts of the world, the CSXs of the world, the Union Pacifics of the world. They are who are, Northrop Grumman, Norfolk Southern. They are who are important because they're going to tell you who's moving what. Granted, not going to tell you their customers, but you get my point.
Yes.
So really, this week really sets the tone, at least from the consumer standpoint, because you'll hear from banks about how loan books are doing. You'll see how they're doing on credit card delinquencies. What are they doing for reserves? You really get this week a little bit of an inkling as to what the consumer is doing. How is the U.S. consumer doing? That's important because that will tell you a lot more than just whether or not Apple's selling iPhones or whatever. Because you really kind of need to know this now, especially given where the yields are, because the 30-year is not backing off. It's well above 5. It's not backing off. The 10-year is on its way to 5. Obviously, it's not there yet, but it's on its way there. And if it gets to 5, oh crap, we could be in for a rocky road ahead of us. I mean, one thing I want to mention, which I didn't bring up this week, but we should have. I should have. I don't know why I didn't. But the JGBs have become a real challenge. The JGBs are the Japanese version of the 10-year.
Okay.
They're at levels not seen in like 30 years, 40 years. You can't get that on the US based charts. You need Asian data for that, for the
Okay.
JGBs. Yet we're ignoring all of this. Am I saying that it's doom and gloom? I'm not saying that. But what I am saying is, if you remember in 2024, we had the carry trade underlying. Remember that?
Yes.
We could be setting up for that exact same scenario right now, based off of how the JGBs are trading right now. That doesn't mean it's going to affect Micron and all the meme maniac stocks, but you do have these scenarios. Again, not saying that we're going down. That's not what I'm saying. But as a trader, your number one job is to protect your ass. That's your number one job, not to make money. If you protect your ass, you'll make money. But your number one job is to protect yourself. So you need to know what is out there. So when things happen, you're not waiting for CNBC or Market Watch or Bloomberg or Fox Business to throw out a headline. You'd be like, "Oh, okay, that's what the headline is today. Now I know." And then they're wrong, because one day it's investors are fleeing tech stocks. The next day it's, oh, everybody's they're buying back semis again. The next day it's, oh, semis are no good. The next day it's the war. They're just jumping from headline to headline. I'm telling you what's out there. The fear right now is Japan, the JGB, the carry trade. That is a legitimate fear of what's going on. If you want to know what could derail the market, it's if that unwinds again. You get a play of what happened in 24, because remember when that happened? It was pretty violent.
Yeah.
And it was quick.
Take us back, for those that don't remember it. Take us back and give us your insight on what you remember from 2024, and how the JGB played into that.
No one was paying attention. No one was paying attention to the yen. I mean, people were, don't get me wrong, but most amateur guys were not paying attention to the yen. They weren't paying attention to what was going on over in Japan. The market started to unravel a little bit. So when you have that carry trade, which basically is to a large extent a hedge, it's a safe hedge that you pretty much can rely on and bank on for cash all day long. And when that had to unwind, they needed to do it quickly. You can read up on the carry trade. I don't want to waste too much time on that.
Sure.
But it's just saying in general, it's a trade that's on pretty much all day long, every day. However, when certain factors change, whether it be, the yield on the JGBs, the US, the dollar, the yen pricing, when certain things start to change, that trade has to change, and they have to do it quickly. So, it's just something to be aware of. Again, I'm not saying that this is happening tomorrow. I'm not saying that. I'm just saying that there are certain things out there that are not as rosy and as amazing as everybody likes to say it is. It just doesn't. You see this all the time, and with this I'll wrap that up. But you see this all the time. If you watch CNBC, or at least back in the old days, they used to do this. They bring out. I mean, I haven't watched them forever because whatever. But they bring out the hottest reporters they possibly can. All made up. Oh, beautiful! Look at me! I'm amazing! And they're on the floor and everything's going great. And they're like, oh, market's going up. Oh, they're cheerleading and they're cheerleading and oh, everything is amazing. 5 minutes later, they're all disheveled. The makeup doesn't look as good. The hair is a little messed up. Markets oh, that wasn't such a good sell-off. Oh, I don't know how that happened. Oh, the market sold off. They look like grim, like death run over twice. Because they just don't know. They don't know anything. They're just reporters. What do they know? They get a bunch of rumors and then they run with it. In order to really understand what's going on, you just have to do a little bit of research, a small bit, and you can find it. This is not information that's like institution only. You can find this information. It's
Right.
widely available. It's just everybody ignores it. So, outside of earnings, you just have to pay attention to that. That's really what it is.
Good stuff. All right. Speaking of earnings, let's get to it then. Just like you give us a nice preview, we got banks coming up. We have also healthcare stocks. We do have some tech coming up. We have TSM and ASML coming up this week.
Yeah.
TSM is on Thursday AM, and then ASML, what do I have it? Wednesday AM. They're, I think they're important, but no, especially with like the weight of banks, right? They're kind of just a little needle in a haystack compared to.
Not even so much that. I think because that was Skynet. What's in the Skynet? What was that stock that just got that IPO on Friday?
Oh, SKYH.
Something
No.
like that. Yeah, Sky something.
Yeah.
They're rushing these IPOs out because they're just trying to get it. That stock. For just to know who that is.
Sky
You know how you
Hynix.
hear?
SK Hynix.
Okay.
Why is it?
Whatever. You know how you hear every night, like the Kospi, which is the Korean markets, are up huge or down huge every single night.
Mm-hmm.
So this Sky, whatever the hell it is the second name in that index. There's two stocks that move that index: Samsung and this one.
Yeah.
That's it. And nobody cares about Korea. But my point is that you have a lot of gamblers in the Asian territory,
Mm-hmm.
and they're just coming here they're bringing the fun here with this Sky, whatever the hell it's called.
Sure.
So that's really what we've got here right now. I think tomorrow and I think it'll last for tomorrow, Tuesday, and that'll be under that. It's going to be all about the banks, whatever the banks say. And really, I think a lot of it's going to also depend on what Jamie Dimon says tomorrow. He moves markets.
Why are you saying tomorrow?
Because the conference call for JP Morgan is tomorrow.
It's not Tuesday before open?
Why would it the conference call?
Oh, conference call versus earnings. Sorry. My bad.
They're reporting tomorrow morning. The conference call is tomorrow. That's it.
Wait, JP Morgan? JPM?
They're reporting tomorrow morning.
Oh, I got it on Tuesday before open, not Monday.
Oh shit! You're right. It's Tuesday. You're right. It's Tuesday. It's Tuesday.
Oh my god.
Yeah, it's Tuesday. Sorry.
It's okay. It's okay. All right.
Sorry.
Yeah, we're good. As long as
it's
we're on
Tuesday.
the same page. We're on the same page.
Yeah. I'm still discombobulated from that Thursday, Friday. So it's just, it kind of just threw me off a little bit.
It's all good.
Yeah, it's all on Tuesday.
All right. So let's go over some of these charts. Let's prepare. Let's hone in. Let's focus and see if we can take advantage of these earnings. So per usual, like banks, they're not high beta tech stocks, right? So they don't move that much. So I think we do have to keep our expectations in check. At the same time, you can make some, nothing to scoff at kind of money trading these 2-3% moves. I guess it really just kind of depends on what happens intraday, right? We could always use the ACD breakout trading. Basically wait for A's or C's to be made. Otherwise, if things chop around within their 30-minute ranges, are they off the table or no?
So two things. Number one, regarding earnings, and I'm going to stress this over and over and over again.
Yep.
Do not take stock into earnings.
Mm-hmm.
They are binary events. You cannot control risk. Do not do it. If you're a long-term investor, then it makes no difference. If you're a trader, do not take stock into earnings. You cannot control risk on binary events. You want to do it through options. Risk is premium paid. You could do it that way. But do not take stock. You could get killed. Plain and simple. Okay. On earnings, you're basically looking for levels on a daily chart. That's really what you're looking for. And then you're looking for 5-minute breakouts. 5, 10, 15-minute breakouts.
Okay.
That's kind of what you're looking for on earnings, because you'll get the juice right out of the gate, and then the juice kind of dies out.
Gotcha.
So you really got to be, you have to be mapped out beforehand. If this happens, I'm going to do this. If that happens, I'm going to do this.
Yep. Part of the
because if you're not, and you're waiting for 5-minute breaks, if you're not aware of where the stock is and where it landed, you're right. You could be in for a world of pain. So you really have to. You have to be prepared. You really have to be prepared.
Well, let's prepare. I have the all of the earnings for this week. Not all of them, but all the major banks names that I think are important. We don't have to go through them all. I want your opinion on ones that are the actual important ones to pay attention to, and we can prep for those. How about that?
So Goldman looks pretty good.
Hang on. Let me keep this clean here. Let's go Monday. FBK. Does that matter or no?
Nah, forget Monday. Moving on.
All right, moving on.
The hell with Monday.
Tuesday AM. Yeah. Citibank. Citigroup looks good, right? Flagging to.
No, let's start with the investment bank, because that's going to be the bigger one.
Goldman?
Let's go Goldman first.
All right.
Let's go Gold. We'll go Goldman, JP Morgan, Citibank of America, Wells. We'll go that way.
Okay, cool.
Okay.
All right.
So Goldman, Okay, Goldman looks interesting. Goldman definitely looks interesting. I know you've got it flagged out like that. That's fine. It does look interesting. I think a break and a hold above 165 sends it, really sends it. It's very defined here because it's either you buy above 1065 and that's your you're going that way for that kind of move, and it probably could get to 1080 quickly. And if it gaps up, you're looking at 1100, depending on where it goes and where it happens. On the downside, you got the 50-day at 1012, a break of that, and then you kind of have the move. Probably got 1000, which I don't think it's going to get there. And if it does, for whatever reason, you got 981. It's very easy. This is the easiest chart out there right now. It's 1065 on a buy, and any move below, let's just say a break of Thursday's low takes it to probably to Wednesday, to last week's low, which is about 1020, 1011. And then after that, you got the 50, which would also put you below the 50, depending on where we are, but that's based off of today.
Sure.
And then if the earnings are a complete blech, it could open the door back to the breakout level of 980. It's very easy. Very easy. 970, 980. Simple.
Yeah, pretty clear levels, right? I always like the idea of getting a gap down on earnings at this support level, whatever it may be. Specifically here, let's just say on Goldman, this 980 area, and then looking for it to get bought up on like I guess a 5-minute range break, or 10, 15.
You just got to be careful because it's loose and wide. You just got to be careful because it's loose and wide and spready. You just have to be careful.
So how do you manage it intraday then?
You've got to have a little bit of a wider stop, smaller size. You have to be a little bit more surgical on your entries, and you got to be very, very. If you're wrong, just get the hell out of the way and get out of the way quickly.
Sure.
Don't hope, wish, and pray. Just move on quickly.
Mm-hmm.
Like if you're and that brings you to what's the purpose of a stop? A stop is not there to protect you from losing money. That's not what it's there for.
Right.
A stop is to tell you that the reason why you got into the trade is no longer valid. If you got into a trade and you get stopped out, that means the trade is no longer valid. Plain and simple. It's not there to protect you, prevent you from losing money. That's just not what it's about. Okay, let's move on. Let's move quick.
JPM.
Let's go to JPM. Okay, JPM is interesting. It's a little bit sloppy up here. You've got a couple of areas. You've got 336. You've got 332. You've got 324 on the downside. We could be chopping around over there. It could make a move back up to 340, 345. It's not advantageous. It's just not. It's not a chart I like. I just don't like it at all.
Goldman's better look. Bank of America.
Yeah. B of A. This one actually looks the best out of all the money centers. This is the best looking chart, without a question. You've got clear support at 58. Let's say 58.50-ish, roughly. And if it takes out Friday's high, you're looking for a move up to 61. Very simple. And if it takes out 58.50, your next spot is the 21-day at 57.50. Your next spot after that is 56. Is like 56 3/4, roughly. Very easy. Very, very easy chart.
Wells Fargo.
The city that never sleeps. Oh, you want to go there first? Okay, let's go to WC.
You told me.
Fine. Okay, Wells, clear support here at 86, roughly. This takes off. You're looking for a move up to 90 at a minimum, even like 92, 91, 92. That's if it takes off. If it doesn't, you're low. You got a double bottom here at like 85 and change, like basically 85-ish, which would be, basically last week's low. If that doesn't hold, you got the 21-day. If that doesn't hold, you basically could go down to 82.50, which ties into the 50-day. And also, again, very easy chart.
Right.
Doesn't get easier than that. Okay, the city that never sleeps. So this one's kind of interesting. It's more Goldman-like than JP Morgan-like. It's okay. It's okay. Clear support here at 137 3/4, roughly. That doesn't hold. You got the 50-day 134, and then after that 132.5. So I mean, it's On the upside, 140. You take out last week's high. You're looking for a move up to 147.5, and then potentially higher than that. That's kind of where it is. It's very easy.
Tuesday. You care about this name? I don't.
Which name? What is it?
Air Test Systems. It used to be. It was super popular over X. Nice base breakout retest, and it absolutely ripped. But now it's just gotten crushed. I don't even know what to do. So I don't know if you know what it is or not.
No idea. Excuse me, no idea.
Yeah. All right. Move on. ASML.
Yeah. So
base break. It rips. It's super sloppy up here. Like this is like it's just like memory and
it's a chop fest. It's a chop fest. And by the way, it's an $1,800 name. How many shares are you buying of an $1,800 name? It's uninvestable. Move on from this. What are you buying with this?
Progressive.
What's the ticker?
PGR.
What the hell is this?
Progressive. Insurance.
Is it an insurance company?
Yeah.
Okay, moving on. Next.
All right. BlackRock. BLK.
Another one.
Yeah, I was gonna say it looks. I think we should just skip it. It's super. Yeah, it's messy.
Yeah, it's
all
gross.
right.
It's gross.
Morgan Stanley.
It's okay. I mean, it's also very it's a choppy, sloppy mess. So it's
right.
I wouldn't know what to do with this until Tuesday. I would want to see what happens, based off of
Wednesday.
Tuesday. I wouldn't touch this. Yeah, I wouldn't touch this now.
J&J. Wednesday AM.
Well, this is a great looking chart. I mean, there's not
I know
much
it's good, right?
Yeah. I mean, maybe if you're lucky, you get a move down to 250, buy up there, just the retest of the breakout. That would make sense. Also lines up at the 21, but that would be a good spot. Again, this is not high beta tech, so you're not going to get, but it's just a quality name.
Yep. I think this moves a little bit more than banks, at least. Pretty sure it does. At least it looks like it.
Why are you drawing smiles on the chart for?
Oh, the smile. It's the base right there.
Yeah, I mean, it's a nice rounded bottom. You're basically setting up a cup and handle, but scrunch it.
Yeah, I'm trying to help viewers. Viewers see it.
No, but I want you to crunch it. No, crunch it. Crunch it more.
Make it a little bit smaller.
Yeah, crunch it
right
more.
there.
No, the chart itself. Put that thing back.
Chart. Sorry. Okay.
Yeah, put that saucer thing back. That smile.
The whole thing, right? What I originally did.
Yep.
Messing stuff up, man.
Okay, stop. Crunch it a little bit more. Now make the chart smaller. Crunch it. Stop. Yeah, there you go. Okay, so this is the beginning of a cup of what's called a cup and handle. No, you made it too big. But basically, the smile that he's making, that's your cup. Okay, now make it a little bit bigger. Now make it wider. No, wider. Now you made it smaller. Make it wider.
No, Dan, there's a lag. It's the lag. It'll catch up.
Oh, okay, fine.
It's pretty bad. There we go.
Okay.
All right.
Okay.
Yes, there it is.
Okay, so that move up, that's your handle. This is a cup and handle. If you can draw a line, basically like a trend line, on the other side of it, on the side of the smile, just to show that the handle. Yeah, the left side, yeah. Or my right side. I'm looking at the screen, so my right side.
Right there. June 17th or so. Is that what you're looking at?
It doesn't matter. No, it doesn't matter. You don't have to be precise. You're looking more, just want to line up from where that move started. No, not a trend. No, not that. No, not a trend. Take that off. I'm sorry. Not a what's it called? You just want a line going straight up from basically June 23rd up, because that's pretend you're creating a handle.
There you go.
You have your cup. Oh, I don't see it yet. I'm on tape delay, but you have your cup. Now you want to just draw your handle, so you could kind of see what that looks like.
That?
Well, that's basically your cup and handle.
Yeah. Okay.
Wait, I'm a little delayed, but I'm seeing it developing. So that's basically your cup and handle. Yeah.
Yes. Yeah, it looks great. It looks great. I was kind of looking at the same levels, 250 breakout area or the 21. I would love a gap down on earnings around that area, but this is Wednesday AM, so it's kind of hard. You got 2 trading days. Ideally, it doesn't do much, but we'll see. PNC.
You're gonna pick up. You're gonna go through every single one of these names now. Okay.
No, I'm asking you if it matters or not. We don't have to.
Not really. I mean, it's like. I mean, it's. You want to keep it within the realm of what people are actually trading. I was trading some of these names.
Yeah. UAL, United Airlines. This looks pretty decent. Base break.
Yeah, it's good. They're going to be interesting more on the travel side. You know, outside of airlines are not very sexy, so whatever.
Yeah.
They don't really move as much. You look at these ranges. I mean, it's it's okay. It's okay, but like it's very sloppy. It's very gappy. I would this is not like the best looking chart.
Yeah, it's very gappy. All right. JBHT, you already talked about that. TSM.
Yeah.
Good gosh. Good gosh. This is
this is a shit show. This
It
is
is
just a shit show.
It is. I see so many like traders on here, especially with AMD and SanDisk, and they're like drawing these, downtrend lines and oh, it's breaking and whatnot. But I'm like sitting here, I'm like, dude, it's in that. Like it's so. I don't know. I don't like them. I don't like them, and I don't like this.
Well,
I don't.
first of all,
I'm not going to touch it until earnings are out of the way.
First of all, you have it hasn't even gotten to the 50 yet. It's kind of train dragging, but it's very sloppy. It's very choppy. People are going to it because it's freaking cheap compared to Micron and SanDisk. So
yeah, that's a good point.
Whatever.
USB.
In a relative terms, it's just cheaper. I would not waste time here at
Yeah.
all. Not at all.
Netflix.
You
What are you gonna say?
But just before we go to Netflix,
Yep.
I'm not saying TSM is not a good company, but when you're already past looking at A's and B's, and now you're starting to look at C's and D's, that's where it becomes a problem.
Yeah.
This is not an A. This is like a B minus going into C.
Mm-hmm.
I wouldn't be looking at this. All right, Netflix, the stock that can't get out of its own way, which is probably why it's going to rip on earnings.
For real.
They had an announcement, I think, on Friday that they're looking to. I think it was Friday or Thursday. I don't remember exactly. That they're looking to get into live TV somehow or another.
Yeah.
Another way to kind of boost revenue. This stock just can't. The problem with this stock, and this is something we talk about. We talk about this pretty much on a daily basis. The problem with this stock, and it's really a poster child for it. If you look at what happened from February up until, let's say, mid-April, we basically round trip the entire move. And up or down, it's 100% retracement of that breakout, or not breakout, of that thrusting upwards, regardless of why it happened. That's not bullish. And if it was on the downside, that's not bearish. So when you see something that actually has a big move, goes from, let's say, 74 all the way up to, let's say, 107, 110, 108, whatever it was, and then is back below 74, that's a problem. That's literally a problem. So is it tradable? Sure. Is it investable? Absolutely not. They have real issues here. I don't know what the problem is, but it seems as though, I mean, I kind of was alluding to this when the whole thing was going on with Paramount, where they were trying to buy, when they were bidding Paramount for that, whatever it was, MGM or whatever the hell they were trying to buy. I don't remember. It pretty much was make or break for the stock. It broke it. So right now, what's the catalyst to push this thing? They're going to raise prices. They're going to raise prices into a recessionary environment. They're going to lose customers.
Right.
They're going to go with live TV now. So, like, really, what's the catalyst to get this thing going? And they've been sidestepping. Not sidestepping. They've been making mistakes. So I don't know what the catalyst here is, honestly. It's not the same Netflix that was once like a rock star. It's just not the same company.
Mm-hmm.
It's just not.
You think you're pressing your luck down here if you go for a short?
No, I don't think so. No, I don't think so.
No,
because you're chopping around. It's not like you've had like this massive move to the downside where you're kind of pressing. You're not really pressing here. If you're looking at it from price perspective, maybe you're pressing, but from a chart perspective, no, you're not pressing. Not at all.
Yeah,
not at all.
I think we're
Not
at
at all.
least get this gap fill. I've been eyeing it for quite a while now. I think we're going to at least 66, if not 58. But we'll see what actually earnings brings. I wouldn't mind a gap down to this 60, and then see if we can get some intraday action getting bought up.
I don't think they're going to buy it up.
You don't think so?
Honestly.
You don't think if it gaps down that much, it's not going to get damn?
I don't, because it's not like they're having issues. They're not the same company.
Yeah,
It's just not the same. Remember, we look at them as stocks, but they're companies. It's just not the same company.
sure.
The stock is not going down because people are shorting it. The stock is going down because the company is just not, it's not doing what it's supposed to. That doesn't mean it's going out of business. It's just the stock is a reflection of what investors believe how the company is being run, and they don't believe the company is being run correctly.
Mhm.
That's it. Plain and simple. I mean, obviously, you could make some money on the short side, but I don't think you're pressing or pushing your luck. But there's probably better places to be. Really, there's probably better places to be. And on top of that, being short the market right now is very hard, especially when you have an administration that basically is, he basically told the shorts, don't do it. That's pretty much what he did. So it's very, you have to be very careful.
RF, what is this? Regions Financial. All right, I don't even know what these are, unless you think Truist Financial, Fifth Third Bank. Does that matter?
No, these are all regional banks. Regional banks are not important until they're important, and they're not important right
Okay.
now. We should tell you this.
Travelers. Travelers looks decent. Another insurance.
Really just looking. You're just looking for stocks.
we're I don't know. I just wanted to see if you thought it was important. I don't know. I don't pay attention to these.
It's an
these
important
names, and
company, but
so-
it's an important company. It's a useless stock to the market.
All right, cool. Good to know. Good to know. All right. With that being said, then, what are you
want to look at pets.com now
Pets.
or stamps.com? Is that the next one you want to go to?
Is that Petco? Is that still around? Woof! There it is.
Look at Petco or stamps.com. Like, what's the next one you want to go
All
to?
right. I'm long in this right here. Full port, max margin. Just kidding. All right. So, all right. Cool. Let's talk about volume. Let's talk about the special topic of the evening. So, volume is obviously it's a important thing. At least I used to think.
Before we get to volume, one second. Before we get to volume, just remember, the beginning of earnings season is always a little on the boring side because you got to get the banks out of the way and things like that. Next week, things start to pick up a little bit.
Mm-hmm.
I think Tesla's next week. I think. And then I think the week afterwards, high beta tech all reports. But you're not going to get like the fireworks because Micron's out of the way. Nvidia's not for a couple of weeks. SanDisk is not for a couple of weeks also. So you're not going to really get the real fireworks. What you're going to get is high beta tech, but high beta tech is lagging. Lagging. Sorry. For right now as a group, they're just not doing well. If you look at Mag 7, I think Mag 7 is underwater. Not Netflix, sorry. Microsoft looks like it's a great company. It's an amazing company. The executive committee over there is amazing. Well, really, really good management. It's really, they do everything well. And I've always been a believer that, Satya Nadella will be written up in textbooks as what management should be, because he just turned that company around. But the stock is acting like crap. The stock is just a no touch, plain and simple. The stock is just a pure and simple no touch. So at least for now, there's just no reason to be in it. But so you gotta have a little bit of patience. And like I said before, I'm gonna reiterate it one more time. Do not carry stock into earnings. You want to do it, you feel like you want to be a hero, then do it with options, because at least risk is premium paid. Do not take stock into earnings. Stocks are binary events. You could get killed. They're not lotto tickets. They're companies. And the reason why they move is because there's fundamental shifts in the business. Plain and simple. Okay, now we go on to the topics.
Special topic, volume. Should we use it? Is it important? Is it useless? What can we glean from it? Or should we just fully take it off the charts? And literally the only reason why I have it on my charts and why I have it on X is because everyone else does. And I don't
If everyone's jumping off the bridge, would you jump too?
no, but it's just like I feel like it helps people that are trying to learn might catch their eye on my charts. It's the reason why I don't have the that's why I have candlesticks on there too versus the
Bar
good
charts.
old yeah, bar charts, right? Nobody knows what this stuff is, and so I just kind of, I blend in so
Well, that's
people
what
will
you're here
pay
for. You're here to
attention to
educate everybody. That's what you're here for.
me. That's what we're trying. All right, so anyways,
Okay.
yes. So volume. Why is it when I first met you, I used volume a lot. I used it part of my analysis. And I'm trying to look for a chart for like to have something clean volume wise. Um, for part of my analysis on like, oh, when should I enter a stock? When am I looking for an entry? When am I looking to get out, et cetera, et cetera. And then I met you and you're like, you know what? Volume isn't that important. I don't think you use the words it's dirty, but it's not accurate. Because there's a lot of stuff that goes around in the background that we don't necessarily know of, right? And so basically, I guess, give an overview of, I will quickly, of like what most people typically think about volume wise. Number one, you look for high volume, ideally on green days, right? Here's a big old red volume bar. You would anticipate some sort of follow through to the downside. You can, when you look for entries, you typically look at the slope of the volume. Oh, look, we have a high volume here, and then we have decreasing volume. And then all of a sudden on Monday, we get a nice volume burst somewhere up in here, breaks the average, and then it continues on higher, right? And so you look for volume. Most people do. They look for these patterns of increasing volume, decreasing volume for patterns of entry and exit or accumulation. I think VLOs might be the best one that I have right now. Entry points of accumulation, right? So ideally, you get less volume during rest periods, and then you get more volume on big moves up. Those are like the standard typical volume rules that everyone seems to follow. What do you have to say to that? I don't necessarily remember everything that you've taught me. So this is good to go over for me again, but also for those that don't know what they don't know and don't know what you know. And so
The
what
first
do
problem
you,
with volume is,
yes.
is that volume is very deceptive because number one, before we do anything, just on a common sense thing, if someone does a swap, you'll never see it. You'll
Mm-hmm.
never see it. So that's the first problem. So volume doesn't take into account swaps. What a swap basically means in the most basic way we could explain it. Let's say firm A wants to buy 1 million shares of, I don't know, Microsoft. Firm B says, I need, let's say, I don't know, I need 1.5 million shares of, or 2 million shares of, I don't know, Apple, let's just say. So they'll figure out a way to get dollar for dollar, on a
Mm-hmm.
volume dollar thing, and they'll swap it out. They'll say, okay, you give me, I'll make up a number. Let's just do the whole thing. I'll give you my 1.5 million Apple. You give me your million Microsoft, and we'll just make a trade that way. So they just swap it,
Yep.
and that doesn't get reported. You wouldn't know about it because it's a block. They just do it as a block. Boom, done. So volume is to a certain extent hidden. The volume that you see on a day over day basis is algorithmic trade. It's not real volume. It's algorithms going back and forth, buying and selling. It's not real interest, not real volume. So anything you're getting out of that is not really real. Like when you look at back earlier this year, SLV volume, when the SLV was doing a 500 million shares a day,
Mm-hmm.
500 million. The last time I saw shares like that moving was in 2011. In 2011 was you saw volume like that in the SPY and Bank of America and GE. Why? Because of Dodd Frank, the banks had to get out of their out of their prop positions. So you were just seeing that kind of volume just in general. That was the normal volume. The SPY did on an average day a half a billion, 600 million shares was an average day in the SPY. Every day was just normal. A low volume day was a half a billion. That was, now it does what? If it does 60 million shares, it's like, wow. So, you know, you're dealing with a situation. So let me go back to the SLV thing for a second. That volume was not really SLV volume. That volume was gamma squeezes because people were going, you know, berserko in the option markets, and they were forcing the dealers to cover. So that wasn't like real volume. The problem with volume in an environment that we find ourselves in today is that you never know if it's legit real volume where there's interest, or if it's just shenanigans because there's just a bazillion trades going off. So that's why volume is almost to a certain extent a big giant waste of time. Now, certain times you want to know what average volume is. So, for example, if you're in the commodity markets, and let's say you're looking at, let's say, I'll use markets that are kind of pure: coffee, cocoa, cotton. Let's just do coffee and cocoa. You know, on an average day, coffee and cocoa are doing anywhere, I'm not going to separate them, but are doing anywhere from 22 to 35,000 contracts a day. You know that's what they do. So if the volume is heavier, you know it's real, you know something is going on. Okay, there's no algorithms there because liquidity is a concern. You know to a large extent, and you could have a lot of volume, by the way, and something could go nowhere. So volume is just transactions. So if you have all these transactions going off, but the thing isn't going anywhere, what's the volume telling you? It's telling you nothing. It's telling you nothing. So you can have the ones that'll turn around and say, well, if you look at market profile, it'll tell you that there's this support, this resistance, and this node, and that node, and A period, and B period, and blah, 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 blah. At the end of the day, you're not making money off of it, because really you can have all this volume and you're not going anywhere. Now, you'll have people who are in the order flow situation that'll tell you there's an iceberg order there. That's a very popular thing in order flow: iceberg orders. Iceberg order is a way for them to justify when everybody's buying something and it's not going up. That's what they do. Or if everybody's trying to short something, it's not going down, it's an iceberg order. For whatever reason, you know, there's ways in the order flow community to kind of justify when things go and things don't go. How about just algorithms just pushing, just transacting? How about that? You know, dark pools are going on. You have things where volume is not reported. There's a thing where, if you ever look at the SPY, at the end of the day, if you can see it, not everybody can see this. If you look at the SPY, and it's specific to the SPY, you could see it. At least if you have direct access, you can see it. Direct access means that you put your orders directly on the exchange. So if you're going to be, let's say you have Lightspeed, you could see it. You could see it on Lightspeed. You could 100% see it. Where you'll see like these wacky prints happening, and you'll see like these crazy bars, and it's always at like 4 o'clock, 4:01. It's like these weird prints. It's trades that are being reported to the tape now. You can't get involved with that. But that's volume that's being reported now from a prior period. You know, dark pools do not have to report that same day. They could report a couple of days later. So because of that reason, you're never really looking at volume that's really, to a certain extent, helpful. It's not, what are you getting out of volume? Something can move without volume. Let's go a different route for a second, okay? What moves a stock, a commodity? What moves it? What really moves it? Is it volume or is it liquidity?
I say liquidity.
Liquidity.
Yeah.
Liquidity pockets make things move. If you look at treasuries, they don't go anywhere all day long. I mean, granted they move, but there's a ton of volume. If you look at a dome or you look at a level 2 of treasuries, there's literally 2,000-3,000 on every bid and every offer, everything. There's so much freaking liquidity. There's a gazillion contracts going off. There's tons of volume, but it doesn't go anywhere because the liquidity just keeps it locked. Whereas you look at, let's say, the NQ, for example, or even let's use even Micron. We could use Micron. Let's use a stock, Micron. Micron, the spread is a buck wide. There's no liquidity there. As a matter of fact, to trade the options in Micron is almost suicide because there's no liquidity there. Now, I'm not saying you can't get in there with a 1 and 2 and a 3 lot and a 4 lot and a 5 lot and a 25 lot. I'm not talking about that. I'm talking about if you want to put on real size, you cannot do it. because there's no liquidity. You just can't. So you can't trade micron options because there's just no liquidity. You may want to, but you just can't. And when I'm talking about size, I'm talking about real size. I'm talking about, the equivalent of 10, 20, 30, 40, 50,000 share blocks. You cannot do that in micron in those options. You just can't because the volume, the liquidity is not there. You can do it with a 2 and a 3 and a 4 and a 5. You could do it 100%. But I'm talking about if you're putting on real money, you can't do it. You just can't. And by the way, if you were a fund man, just to make it even more, just to understand even more about this volume, if you were a fund manager, let's say, for example, how many shares can you buy at what is it, $1,000? You buy 1,000 shares. What is that, $1 million?
Yeah.
Okay. So you buy 10,000 shares. You have $1 billion fund. That's 10% of your fund is locked up in Micron stock. How are you going to protect yourself? You have 10,000 shares. How are you going to do it? Because you have no liquidity of the options to do it. So the point I'm trying to say is you could have all this volume, but it's liquidity that really is moving things around. So volume is very deceptive in that regard. Now was volume always like this? No, it was never like this.
Yeah.
Years and years and years ago, you could use volume to a certain extent because it was pure. Now it's not pure. You have a machine that's just churning all day long. And because of this reason, another thing you have to think of with volume is because there's more ETFs than there are stocks, a lot of the volume you're seeing is ETF volume. So again, you're not really seeing, I'm not saying that you're not going to get volume, that you can't have real volume. That's not what I'm saying. But I'm saying on a day-over-day basis, because of what's transacting, it's just not the same. It's not a pure volume. We could say, okay, there's a lot of interest here. Let's say, for example, I don't know, SpaceX is going to have a lot of volume now. Why? Because there's a lot of ETFs that are coming, double and triple leverage ETFs that are coming in, either long or short SpaceX. That's not volume because of interest. That's volume because of the ETFs.
Asset flow.
So
right.
it's just right. So it's just understanding that a lot of these things that used to work on balance. There's a lot of indicators, out of the box indicators you see in charts. On balance volume. A lot of that shit doesn't work anymore because what it was designed to do does not fit this. And it's not this environment. It's this overall market. The overall market dynamics, a lot of the stuff doesn't work anymore just because of that reason. It's just pretty much, extinct. So looking at volume to a certain extent is just kind of meaningless. When you look at a chart, listen, you're going to have earnings, okay? Netflix is going to have earnings on Thursday night, Wednesday night, whenever the hell it is,
Sure.
okay? You pull up a volume on that first candle, it's going to be tiny, but you'll have I'm going to make up a number. You'll have like a $50 move and it's on 2 prints. So you'll have a big fat bar, but yet there's no volume.
Mm-hmm.
So it's all about liquidity. It's really all about liquidity. Market is looking for liquidity. So that's really what it is.
Good stuff. Let me recap there. Firstly, volume does not take into account swaps. So those don't always get reported. It kind of makes it hidden, right? Secondly, volume we see on intraday basis, they're mostly algos trading. So it's not necessarily human
And
beings.
ETFs.
Algos and ETFs. It's not human beings, which it used to be human beings. There used to be emotion to it, but now with the algos and ETFs, it's kind of taken that out. So it's taken the value of the volume out of it. We never really know. So because of that, we never really know if it's real volume of interest or just kind of quote unquote shenanigans with a bunch of just trading from algos and ETFs going around. It used to be a pure instrument. So, and it's easier to see the volume importance in names that are pure, such as cocoa and coffee. So it's easy to understand what the volume actually means, if the volume means something.
Depending on the market.
Depending on the market, in those clean and pure trades, such as those futures markets in general, which completely makes sense.
Or even stock, or even in stocks that are a little bit more pure. Not every stock is gamified. Certain stocks are a little bit more on the pure side, but it's finding them. It's a little bit more challenging just finding them. The reason why I bring up, let's say, coffee and cocoa, that's why I'm kind of leaning on those, is because they're ICE markets. So what does that mean for those of you that don't know futures? Because ICE, you cannot trade ICE unless you have their data. It keeps a lot of people away from it It's about $150 a month for ICE data, for ICE US at least, which gives you access to all those markets. Because people don't want to pay that $150, a lot of the shit that comes in the ES and in the NQ, that's not in those markets. It's a professional market because, what's $150 a month? It's the cost of doing business. But people don't want to pay that. So it keeps a lot of crap out. So because of that reason, those markets are very, very pure. The other reason why they're pure is because of the fact that the volume is not as great. The algo can't really live there because the liquidity is not there, because there's no volume. The algo could get stuck. So it's really more of a human-based market. I'm not saying that there's no machines in there. There are. It's just different. That's all I'm saying. It's just different. You can't have a machine in a market that's doing 20, 30,000 contracts. Like in orange juice, there is no machines there. Orange juice does on an average day about 1,000 contracts, 1,100 contracts a day. That is all human beings. There is no machines in there because they would get killed. They can't be in there. It's not possible. So if you want to be a human being and you want to trade something, you can trade orange juice. I wouldn't tell you to do it because on a one lot, you're going to be, on one lot, you're almost, you can almost be 10% of the volume. You could move the market all by yourself.
Right.
So that would be insane. But there's advantages to lower volume based markets, but there's also disadvantages.
Sure.
That's all I'm saying.
Now, when you say stocks that are more pure, do you mean that they're not in 1,000 ETFs, so they don't have a bunch of random flows from those ETFs going into it?
It's a combination. It's a combination of, usually it's the ones that are like the most liquid, like the Nvidia, the Apples. They're in everything. I think Apple. I'm not sure. I'm sure you could Google this information. I think Apple's in something like 360 ETFs or something like that. They're a crazy number. So that's not pure. And I'm not saying it's Apple's fault. Don't get me wrong. I'm not blaming Apple for this. And I'm not blaming Nvidia for this either. It's not their fault. Don't get me wrong. I'm not saying it's the company's fault.
I have an answer for you. I have an answer for you.
Yeah.
You need to double your answer. Approximately 664 to nearly 900 different ETFs.
Okay, so that's your answer. So
Yeah.
if you want to know why Apple doesn't go anywhere on a daily basis, there's your answer.
Yeah.
That's why these stocks are not trade. That's why. Listen. Let me take a step back. Okay. The art of day trading, to a certain extent, is kind of gone. Why do I say that for? Because the pure day traders, especially in stocks, they don't really have that type of movement anymore, because you're contending with, as you just pointed out, ETFs, like major ETFs that are doing this kind of crap that you have to deal with. How do you compete? You want to buy Apple, you want to day trade Apple. How are you day trading Apple when you have to contend with 600, how many?
664 at minimum, up to 900.
Okay, that many ETFs.
Yeah.
Exactly how are you doing it? Because the stock's not going anywhere. Because they're not all buy only. They're not all long only. Some are buy, some are short, some are double, some are double long, some are double short, some are triple long, some are triple short. So the pure art of day traders, like the guys who were really day traders, like I'm talking about real day traders in the early 2000s after .com, up until 2011, 2012, those guys do not exist anymore. There's a couple that are still around. For the most part, most of them are gone. So you're going to ask the question, what happened in 2011, 2012? That all of a sudden, what happened? They just blew up? No. Prior to that period, the banks were allowed to trade for themselves. Dodd-Frank got rid of that. So that's why I said in 2011, you had the banks, you had massive volume, which, more than normal. Like I said, the SPY used to do like 500 million shares a day. GE used to do like 600 million shares a day. Bank of America did that because the banks were all trading it. Once the banks had to be out because of Dodd-Frank, all the volume dried up, all of it. So now you're in a situation where the guys who were pure, I'm talking about pure, 9:30 to 4 o'clock, those guys are dinosaurs. For the most part in the equity markets, there are a handful of guys that do it. Don't get me wrong, there are a handful of guys who are skilled, who really do it. But when they're doing it on size. They're not really doing it on options. They're doing it on size. They'll mix in some options, but they're doing it on size. They're trading 1,000, 1,500, 2,000, 2,500, 5,000 share lots because they need to have massive size on because they're trying to capture small little moves. Those are the guys that are done at 4 o'clock. There are other guys who hold for 2 or 3 days, and that's how they adapt it and they move on that way. Futures gives a little bit of a different benefit because future you have the leverage. So because you're doing that, you don't have to get in with massive size because you can capture moves based on the leverage. Now, the thing that's about to change, which is going to change in about 2 weeks, which is coming, is single stock futures are coming. Nobody wants to talk about it. Nobody wants to understand it. They are coming. Each contract, it's 50 names that are being released. Each contract is going to be equal to 600 shares. They are going to be trading. I mean,
Oh, you cut out. We lose you, Dan.
I'm not sure.
There you go. I hear you now.
That I don't know. Okay. I said, okay. I said they're going to be, each contract is going to be equal to 600 shares. And I'm not sure if they're going to be trading 24/7, if they're going to be 23/6. I don't know. That I don't know. I just honestly don't know. I have to find out more. But that's also coming, which is going to add, if you don't think it's going to add more volume, because we're talking about volume, it is.
Yeah.
Because you're going to have guys who are going to have on, I'll make up a stupid number, a 10 lot, which would be 6,000 shares. So let's say I'll make up a number, Apple. So they'll have on a 10 lot of Apple, which would be equal to 6,000 shares, right? Because 10 times 600 is 6,000. Okay. Let's say they want to hedge. So maybe they're going to hedge by either they'll do it through options or maybe they'll just hedge through the stock itself. So that's more volume coming. Is that interest volume? Is that real volume? Or is that volume as it pertains to a hedge based off of the single stock future that you have? So that's what I'm saying is there's so many different things that are coming. You just have to understand it. I'm not saying you can't make money. I'm just saying is you have to understand how you are making money. It's not, it used to be you could come in, open up a chart and boom, let's go. There was an art form to it. Then you had to actually prepare. Now you have to, not only do you have to prepare, but you have to really know what your competition is doing. And your competition is not a trader. Your competition is, Joe Blow in the quant shop, or Joe Blow buying 2 or 3 options, out of the money options because, hey, he sees it on Wall Street Bets or on Reddit. I mean, that's who you're competing against.
Yeah.
So it's a lot of the pureness is just not there. Again, that doesn't mean you can't make money. It just means you have to adapt. The reason, and I'll end with this, the reason why the floor guys disappeared primarily is because they didn't adapt. We saw it coming. The first markets that went electronic, we saw it. We're not the New York Stock Exchange. The first markets that went electronic were actually ICE Europe. We saw it happening. We saw it. We heard about it. We knew it was coming. ICE Europe was the first markets that were electronic. Then the NIBOT, which is the New York Board of Trade, that was owned by ICE. So ICE bought them, and then they were taking them electronic. So New York Board of Trade was coffee, cocoa, orange juice, cotton, sugar. Those were all going. And then you heard the rumblings that once you saw that happening, NYMEX got bought by CME, and all of a sudden you start seeing there was this push into electronic markets. As the futures markets were doing this, the New York Stock Exchange was starting to do it. NASDAQ was already electronic, but nobody worked on the NASDAQ, so it wasn't a big deal. But everybody saw it coming. I'm not saying they were surprised. Everybody saw it. People didn't think it was going to happen as quickly, but everybody knew it was coming. And the ones that adapted had careers and they continued on. And the ones that didn't moved on. They're no longer trading. It's the same kind of situation right now. I'm not saying it's as dramatic where you're going from open outcry to all of a sudden you're going into electronic markets and it's a whole different arena. And it's a whole different ballgame. The open outcry system and the trading arena that we're in today are night and day. They're not even remotely the same thing. Not even close. Yeah, to a certain extent, certain things are charts are charts and things like that. But you didn't have charts. You didn't have that. You were basically reliant on voice. Well, maybe we'll do a special on that one day, Dave. We'll figure that out. But it was a different arena. Now you're in a situation where it's kind of there's like a change happening. There's a sea change happening because hedge funds no longer control the market. It's the meme maniacs that are buying 2 and 3 and 4 lot options, and you've got millions of these guys, and they're pushing stocks around, and they think they're always going to be saved. It's a different environment. The environment is not so much about the stocks. The environment is about who the participant is. That is the next sea change in the market. You may not believe me. You may think I'm talking out of my ass. It's fine. I listen. I've been known to do it. There's a lot of things. I'm right about a lot of things, and I'm wrong about a lot of things. This, I know I'm right. I'm 100% confident I know I'm right on this. Why? Because I've seen this movie play out before. It played out a little bit differently, but it's played out the same way. And it's just where we're going. The market is changing. There's more ETFs. Now there's single stock futures coming. You have guys that are, guys who are literally dirt poor buying 2 and 3 options, and you've got millions of these people and they're blowing hedge funds out of the water. The hedge fund army, they're like, in Korea, I think it's Korea or somewhere in Asia, one of the Asian countries, they call these people ants, little ants. That's what they call them. I forgot exactly where it is. I got to look it up. But they call them ants. Why? Because you get like a bazillion ants, and one little, you get like a million ants come together, and they could literally take down anything. It's the same situation. You have these little ants that are coming, and they're taking down everybody. Now, I'm not saying they're taking the market down, but the point I'm trying to make is, if you're a fund manager, you can't compete with them. How are you going to do it? You might be smarter than them, but at the end of the day, you can't justify having these positions, 10% of your book. You're going to get killed. You lose all your money. So the participant is changing the game. The algorithm is changing the game. Citadel and Jane Street are changing the game. So the only way that you're going to make it is you have to adapt. That's why this volume thing is kind of useless. It's kind of meaningless. It's just you have to adapt. And I know that I've used this order flow thing before, iceberg orders and all this other shit that I was saying before. I'm sure this worked at a time. It was amazing. It was great tools. And I'm sure you could market your product that way. And it's awesome. It's amazing. In today's environment, you have to ask yourself, is it really an iceberg order? Or is it ETFs, screwing around with each other and out of the money option idiots, piling in and pushing gamma? What is it? Is it pure? Is it real? 9 out of 10 times it's not real. Not to saying that the volume is not real. It's real, but it's not real in the sense that you're looking at it and you're getting something from it. You just have to understand how the game is changing. It changed like every other game. It changes. It changes over time. Those who adapt survive. They do well. Those who do not are doing something else. Plain and simple. They're just doing something else. Okay, I'm done. I'm done yapping. No, because the problem is, and this is where I feel like it's a disservice to people, because people believe, someone posts all this shit online, or they do all these things, and they don't, and people believe it, not because they're stupid, because they're not stupid, because they just don't know. So they don't know any better. So when they don't know any better, what do you do with that? Like, I can tell you right now, as I speak to asset, money managers all the time, and there's one recurring theme. I ask them all the time, how many of your customers are selling? And I get the same answer all the time. None. They don't sell. You know what they do? They just don't turn on the computer. They don't open up their statement. They don't look at their accounts. How do you compete with that? That's not market. How do you compete with that? You compete with people who never sell. You can say always buy, 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 buy. That's not a market. The stock market is not designed to make you money every single day. I'm sorry. I hate to bust the bubble. It's not designed for that. It's supposed to be a risk asset. For those of you who went to college, I learned this years and years ago, because I don't know what they do now, but I've been in college. The last time I was in college was a long time ago. Stocks were always considered risk assets. You could make money, you could lose money. Now it's pretty much, everybody treats it like it's a guarantee. You come in every day. People don't look to see what's going on. They look to see how much money am I up today. Like, how much interest did I make today on my savings accounts? I go to my high yielding savings account, the stock market. How much money am I up today? That's the way people treat it. They're not risk assets. Because of that reason, it changes the way you have to look at it. It's really that simple. I'm not saying blindly buy everything, and I'm not saying you can't short. That's not what I'm saying. It's just you have to understand the mentality of what's out there. And this is not the exception. It's the rule. This is what's going on.
Dan, per usual,
Sorry for
great
rambling.
discussion. Don't apologize. It's good stuff. I like the passion, and this is the stuff that people need to know. That as traders, professional traders, we need to understand these things. And there's a lot of misinformation. Lack of good guidance of what actually going on for marketing, things like that. And so it's good to be aware of these things. So don't apologize. All right. We appreciate it very much. I think that's good to wrap up on. And we'll catch us. We'll do this next week. Yeah. We'll have a lot to talk about, especially with earnings season coming up next week. So we'll continue to prep for that. Sound good?
Yeah, I think maybe we should do a special topic of pit versus screen. What the difference is.
What
be
versus? Say it again.
The pit versus the screen. Open outcry versus the screen. What were the differences? What are the differences?
Cool. Sounds great to me.
Special one off.
All right. I will catch you later on in the week.
All right, bud. Talk to you soon. Have a great night.
Thank you. You as well.
Take care. Have a good night. Thanks, everybody.
Good night.